Oh, welcome, Essentials Room. So, just to let you know on how we're doing things, number one, we try to get the direction right. Number two, we try to initiate correctly. Remember, it looks good to average down, but the key is if you only have a certain amount of money, heck, that's why you get panic sell offs because you get everybody having to liquidate. So just keep in mind on a number of things. Guess what? You saw it with Hindenburg Research. They were short INQ. So I'm not just talking about buying on the way down. I'm talking about shorting on the way up. They're a short selling firm and they just closed their doors. Why? Because you can't short on the way up. You can't buy on the way down. So it goes both ways. So when we try to play things on the downside, we're looking for a defined pattern. When we're trying to play things on the upside, we're looking about things going to support, and then we're looking for the reversal pattern. So I'll show you on how we do reversal patterns and everything. So let me show you what we're talking about. Number one, I want you to realize that when we do these things, one of our favorite things, I don't care if it's a stock, I don't care if it's a 1 minute chart, we look for follow throughs. So I'll show you what we mean by follow through. So the first thing is I have a ton of followers on StockTwits. As you'll see, I just go through StockTwits and my 56,000 followers. So let me share this with you so you sort of know. And the reason that I was in the top 10 out of 5 million people for content is because you'll notice something in there. And I think you will. And the thing you'll notice in here is none of these are bragging. That's StockTwits really frowns on it. So just to let you know, they really frown on it. So when I go into here, you're gonna see it's all posts. There's no bragging. It's content. And the reason I'm showing you that is I put a lot of content in there. I put a lot of content on our chat in the Chart Patterns Mastery, but it erases at night. So that's why I would go into StockTwits and just add that kind of link in there and see what I'm posting. Yeah, I don't post as much as obviously I post in Chart Patterns Mastery, and I don't show trades in there, but I'll show direction. So let me show you what we're talking about and what our methodology is. Number one, if the things that made the market go up are still going up, then you don't fade on the downside. What looks bad in there? Nothing. So if you want to do something as a hedge in the overall market against your longs, that's fine. But when this is going up, so we're very much into correlations. So I'll show you reversal candles and I'll show you correlations. But the first thing is my setup. So just keep in mind with the setups, I use an oscillator like a lot of people do. I'll use moving averages like a lot of people do. I use historical stuff and candles. Number one is patterns. So when you see this go up on the right, then the thing that is a good correlation is the Russell. Then it's more likely the Russell is going to break up than down. When this went down today, this was more likely to break down than up. But like we were talking about, it's a push, which means I'm not shorting it. I'm not buying it. It's just sort of sitting here. So the only thing that a lot of people are waffled about is that we're off on Monday and you wonder about tariffs and all that stuff. So that's number one. Number two, like I said, I like to combine different factors. So, we look at sentiment, we look at a number of things. I like that 3 reasons to do a trade. So just keep that in mind. I like that 3 reasons to do a trade. And I'll show you a couple of things in here. So, number one, what I wanted to show you in here is this. And thanks for saying that about StockTwits. I like the option. So thanks. But let's go into what we're talking about methodology wise. So number one, I harped on this. Now you might ask, why is the NASDAQ not going up if the bonds are up? Well, it all depends on what they're keen off of on the upper right. Right now, are they keen off the Taiwan semiconductor or they keen off the Amazons and the Apples and the Tesla. Well, it seems like they're keen off the Apples, the Amazons, the Metas, and the Tesla. So this was something we put in Chart Patterns Mastery was this. So the NASDAQ forming a top. But the problem is you have to do this. You have to look, and I'll put the NASDAQ on the right as well. We'll put it on a 15-minute chart. This is what I was showing earlier. This is why you combine factors. See this possible top? The key is how it works off any oversold. What we mean by that, because you've seen it for a long time, you see the oversold. You see the possible top, but you can't initiate on the downside when it's oversold. You want to see what happens when it recycles to the zero line. This was verbatim what I typed in the Chart Patterns Mastery. Sort of exciting in there, but that's what verbatim. So we were talking about that. We were talking about how it works it off. So what we mean is when it gets oversold, is it retaining a topping formation? As you see, it did. So that's why you don't chase it. But you really, when you see this kind of type, then what you're going to do is go to a shorter term chart and look for your initiation. It's extremely tough to go and buy up here when it's at resistance, but it's hard to short up there when you don't have a defined pattern. That's what I mean by a push. So, and that's what you're getting. Now, if the bonds were down a point and the Russell was down 10, that would be a whole different situation, and I'd be massively short. But I don't have 3 reasons. Do I think the NASDAQ's going lower? I'm only going on price action. And the NASDAQ's acting like it wants to break that. It's acting that way. So some of the good stocks, like the Apples of the world, are acting terrible. Now, this is another thing about a topping formation. There's a number of different kinds of topping formations. But if you're looking at what we're talking about, you'll see in here, I look at trend lines. A lot of our work is trend lines. The tighter the pattern, which I mean these tight candles, the easier it is to draw a trend line. And the tighter the pattern, the tighter the stop. As you see, look at the right. Nothing's happening at the moment, not yet. But the tighter the pattern, the tighter the stop. The other thing, I don't care about the tariffs or what it's affecting. I'm caring about if it hurts the broad market. So now, why is Apple down on some bullcrap news? It's down because they can't buy back stock. Well, they voluntarily don't 5 weeks prior to earnings, which means bearish patterns and bearish news are more likely to pound the stock. It doesn't mean it has to go down. Like you saw, it went up 8 points from its low. But bearish news is more likely to pound the stock, which is what happened. So it didn't hurt that it got up to resistance. But bearish news is more likely to affect it negatively. So JP Morgan had a buyback blackout, and lousy news back here hit the stock because they couldn't buy back stock. Now it doesn't matter what the news is. They had their earnings, and they can buy back stock. And like you say, NASDAQ developing a top. So in the meantime, Chart Patterns Mastery, we're still in the ES on the downside, and we're long some slop on the upside. So just, we don't have a lot on. In my opinion, I think markets are going to waffle into Trump's inauguration because people are worried about tariffs. So keep that in mind. Also, Chart Patterns Master is just a courtesy that I'm on in there because it's triple broadcasting. So I'm sorry, but I can't answer questions in there. So keep that in mind. The other thing, I look a lot at bullish and bearish divergences, but really you got to combine it with other things. So in answer your question, Amer, it's a great question. You see the negative divergence here, right here. The big problem I've always had with divergences is that's hindsight. because you don't know if this is going to go all the way up to here and this is going to a new high. But it's the trend lines, and it's the bear flag after the break of the trend line. So go into a 2-minute chart now. There's a little bear flag, not much. I mean, but that's 35 points. But it's this that I'm watching. So you got an oversold on an hourly, an overbought on a 15. What's it mean to me? Well, I would love to see this sit in this area for a couple of hours so that MACD on the bottom gets back to 0. Then I'll get real bearish. But I still like to combine it with a chart. So if I was bearish, I'm not going to short here because I don't know when it's going to stop. But I'll mess around here, but I'd much rather see a bear flag in here at the support. In fact, that's almost a Brecher ledge. Now, that's the other thing. I did a whole class on short selling. I don't think it's evergreen, so I'm not sure you can still access it. But basically, a Brecher ledge is not this. That's more top. A Brecher ledge is after a sell-off. It's basically a bear flag with a horizontal line. That's a horizontal line, but it's not a sharp sell-off prior to it. That's why a lot of people, I think, are getting this wrong, that are thinking this on a daily is a bull flag right here. That doesn't look like a bull flag to me because the prior move wasn't up. To me, this is just a channel, no more, no less. So now I want to go over some of the other methodologies. So as you see what's going on, so chart patterns mastery, we're still short the ES, good for us. So, so far so good in there. So just keep that in mind. So all we're doing in here is top of the channel does not mean to short it. At a moving average does not mean to buy it, does not mean to short it. It means to look for the reversal patterns. As you see, it's working beautifully. There's your NASDAQ right in front of you. There's your NASDAQ. There she blows. So now you might say, yeah, but it was sold on an hourly. Well, let's go into it. Just keep in mind an oversold does not mean it can't stay oversold. So you see the dailies back to the 0. Forget that. We're going to the hourly and the 15-minute. And when I'm day trading, I'm using the 15-minute chart patterns mastery. How did that 15-minute work? We talked about it working off the overbought and retaining a bearish structure, which is exactly what it did. So, keep that in mind. It worked pretty well. So it didn't hurt that you had a lot of the stocks that made it go up, going down. So a lot of people are saying, why aren't you keying off the chips? Because the stocks that really made the NASDAQ go up were the Teslas, the Apples. And somebody asked, why was the NASDAQ going up earlier if Apple was going down? It was more the collective. Once they all started going down, that was curtains for an overbought NASDAQ. So I just want you to know that. So chart patterns mastery, we're still short the ES. So just keep that in mind. Still short the ES. Now, I know it looked like you should have covered the ES, but it's all about correlations. So when the bonds went up and the Russell refused to go like up 30. So keep in mind, yesterday, the Russell closed in where it was on the opening, but the NASDAQ was up 300. So with the NASDAQ, you got to go on prior days also. So keep that in mind. So now let's go over the big picture and how I look at it. Number one, like I said, I look at correlations. So a lot of people asking, well, the bonds are up. Why isn't the market going bonkers? Well, the thing is, the bonds went down for 3 months. That's number one. Bonds are at resistance right here. So, I'm going more on the stocks, but this is why we talked today about the overall market being a push. A push means relatively unchanged because the bonds up, good for Russell, but these have already had an outside move to the upside. So it just seems like a push. If anything, though, if I'm going to play anything, it would be the NASDAQ on the downside. So that's it when it comes to that. But let's go back to methodology. So I want to show you a number of things. So I'm sort of trying to be prepared for you here. So let me show you what we're talking about. So we're going into this, and I want to show you the S&P, and I want to show you on how some people do reversion to the mean trades. I have no problem doing reversion trades on the upside or downside as long as you have a candle to back you up. So in there. And when I day trade, I used at least 4 time frames. So let me just show you real quick so you sort of have an idea. I use an hourly, 15, 5, and 2, and 1 or 2. When I'm day trading, though, I'll look and I saw not Apple, but ES. Well, let's say NASDAQ. So I'll use this for a general frame of looking where support is. You see all the support. You see that support zone. And oversold. What's that mean to me? It means I'm not shorting here. I'm not doing much here. You see all that support. So price is number 1. Number 2, though, is I use a 15 to decide if I'm looking at initiating a short, but then I'll use a 1 to actually time the short. Here, let me give you this share link. I can take a screenshot. Here you go. On this, you might ask, well, why aren't you showing the MACD on a 1? I just don't use it on a 1. I don't use it that much on a 5. I will, but these are the 4 time frames. So the 4 time frames. Let me see if I can share it. This will cost you, Claudia. No, I'm joking. I'm joking. So I'm happy to share it. There, 4 time frame chart. That's my bread and butter when I day trade. Now, you might say, well, why didn't the markets go down to here? Well, I just showed you. Because it's at support. Price support's key. So if I see no price support and I'm bearish, then I'll play it to the objective, as you see back here. Now, like I said, when you're talking about, like Amira was, about negative divergence, I still got to combine it with a trend line. So now I am not buying the NASDAQ. There are too many stocks that look like garbage within the NASDAQ. So I just want to make that clear. But let's go back because I'll day trade in the chart patterns mastery later, but I want to go over all of these things first. So big picture. The big picture is what I showed on StockTwits, that no matter how bad markets look, they have a habit of rallying around the time of the presidential inauguration, especially if it's a Republican, because everybody says pro-business and all that stuff. Ironically, over the last 100 years, the stock market's gone up more percentage-wise during a Democratic administration. I have no idea why. So I have no idea why. I'm just saying that's just go through Stock Trader's Almanac. But let's go back to this, and I'll show you why we were doing what we were doing or how we avoided disaster. Number 1, when you see this is the inauguration. So number 1, does everybody, a number of you know about the election gap. 1980, you filled the election gap. You went back to where you were November 1st. Price support. Then you got a follow through candle. And then what happened? It didn't care about the moving averages. That's what I'm telling you. If you even think of playing the moving averages up or down, in hindsight, it looks great, but it was the reversal candle and the reclaiming that made a difference. Here with the inauguration, they can overshoot. That's what happens in short squeezes. They go up more than you'd ever imagine, which is exactly what happened. It blew through the moving averages. That's why this time, as you see, filled the election gap, then had the inauguration rally. Not the exact day, but that area. So why am I showing 1980? Because Reaganomics, everybody thought that would be the most pro-business environment in a long time. The problem is the bond market yields were still going straight up until August of 82. So this thing that had all these short squeezes in the long run didn't bottom until Volcker cut rates in August of 82. I was on the floor. I was a clerk back then and watched it explode. So interest rates do matter, just to let you know. And when I look at overall interest rates, I'm not talking about today. Overall, the bond market has broken a 40-year uptrend. So just keep that in mind. That doesn't mean markets can't go up because the economy could make things just so strong. But just keep in mind, yields are up and the PE is historically high. That does not mean to short. It means you can look for bearish patterns, sure. When I see these kinds of things, though, usually we hedge in some way and long some things. So that's what we're doing. So let's get back to it, though. So you saw what happened in 1980. You saw what the election rally. That's exactly why we didn't trust moving averages blindly to short there. Now, it is at a channel. And this is a little different than the election, the rally back in 1980, because back then you went straight down. This is your straight up when you had the lack of resistance. This time you have multiple layers of resistance. It might blow through it, but I'm just telling you, at these multiple layers, that's when you're looking for any kind of reversal pattern. When I see the bonds up and the Russell up, and like I said, I think it's a push. A push means even. And as you see, the ES is even. It's just a non-event at the moment. But getting back to it, I want to show you about reversion trades because a lot of people ask. Now, overall, in the long run, if the Russell and the transports don't come back much from the 50, from the 200, then I think all the indexes are going to test it. So just keep in mind with all of this, that it's healthy if markets sell off to the 200. Heck, over 100 years, they always sell off to the 200. The times they haven't, you've had really violent sell-offs. So you have five indexes have gone to the 200. And like I said, not straight down and not around the inauguration. But eventually, that's all I'm talking about. So, but getting back to it, I want to show you about reversion because a lot of people look at reversion trades. They look at buying on the way down. So, and overall, you get bailed out doing that lately. On the other hand, if you only have limited funds, you could be blown out before it rallies. That's why you get panic sell-offs. So everybody has to liquidate. I'm going to go and take in here like this. I'm going to take that 9 EMA and we're going to look at how far it is from the 9 EMA. Now, you don't have to take that. You can take an SMA. We can take an 8. A lot of hedge funds use an 8. They'll use an 8. So as you see, it's more like symmetrical. So what I want to show you in here is this. You see on how far it got under the 8 EMA moving average, the simple. How far? That does not mean to buy it because right here it got far from it and went even farther. The key on the upside or the downside is the follow-through day. Every single one of these. A candle reclaimed the low or made a higher low. Every single one. Every one. The key is you're not buying the bottom. You're buying on the way up then you can have a stop at the low. So Penn mentions this in our Chart Patterns Mastery, buying versus the low. Every single one of these was reclaiming a candle. Every one. So, and you can see it here. Reclaimed a candle, reclaimed a candle, reclaimed a candle. You're not buying on the way down. You're buying after it turns back up. Now, it works that way. How about on the way up? Does it get too far from the moving averages? It sure does. These aren't that far. We're talking about extremes. There's an extreme that far. And what happened? You got the indecision and the follow through to the downside. Here, it's not that far away, but it worked. And then you formed a defined trend line. So it works both ways. Here, I'm sure if it broke here, the first thing you're using is you're looking at this and you're saying, well, I missed it. Nope, it broke. You saw the break. So, and like I said, you can use open, high, low, close. It doesn't matter that much. Don't get too much into the semantics. I like open, high, low, close. I just didn't put it in yet. They're almost exactly the same. So I wouldn't get into semantics. Like the 8 SMA, the 8 EMA, they're so similar that it just doesn't matter. I think a lot of people just overthink a lot of these things. So there you go. 8 EMA, 8 SMA. I mean, that's close enough. Close enough. So, I mean, just keep that in mind. I wouldn't worry about that kind of stuff. I just wouldn't worry. Like I said, a push, because you have differing things today. So now you might ask, well, why aren't you looking to short the markets? Well, you don't have any reversal candle. You don't have it that far from any moving averages, really, in the grand scheme of it. And I don't see any break yet. There's a break. So there's a break. There's a break. Nah, that wasn't that much of one. And you would have gotten stopped. Yeah, it's not perfect. This versus the high, you wouldn't have gotten stopped. So I'm just telling you, that's one way to play reversion stuff. Like I said, down here, even this one worked. You bought when it reclaimed versus the low. You wouldn't have gotten out. And it filled the gap. And that's where you get out. So when it fills the gap after a big sell-off, then you're looking for the reversal on the downside. And that's where you go to a shorter chart, Claudia, to time your entry. On the way down like this, do you buy there? No way. You didn't see the reversal pattern yet. This would have been a better buy if the next candle was up here. So just want to show you on how I do it. Hope that helps. And like I said, you have the bonds up, the Russell up, the chips up, the Apple down. It's just a push today where just both sides are just jockeying for a position, at least at the moment. That's the way I look at it. So the other thing, so number one, if you want to play reversion, have that candle. It works on a 1 minute. It'll work on a 15-minute. Now, ideally, you get a reversal candle followed by a consolidation. So you saw it in Tesla way back here. Go back to Tesla on a daily chart. And what you saw on a daily chart is you got the reversal followed by the consolidation. And one of my favorite patterns is a bull flag in a bull flag. So if that breaks, that breaks. So you got the prior up move. So that qualifies as a bull flag. And then you got the bull flag after a teeny prior up move that if that breaks up, it breaks the bigger pattern. So how many do you know bought on the way down? So just keep in mind that if you bought here on the way down and then you got that explosion, now you know why there's resistance, because all these people are thrilled to break even. I mean, that's the way it works. So that's what resistance is for, all the bag holders. But the key is, if you only have a certain amount of money and you want to stay in this business a long time, you look for the reversal and the consolidation. And like I said, a push. The NASDAQ held support. So we're just not there. We don't have the trade. And so I'm not doing a lot in here. But I just wanted to show you on how that worked in here. I wouldn't care about open high and low or high low close. All that'll do is mess you up. You can use whatever one makes you happy. I haven't seen it over 45 years make a difference. I also know some people use an 8, some use a 9. It's about staying on the correct side of the market. And for Q1, what names do I like? I don't know right here. And also, I'm not, that's for the chart patterns mastery room. Just keep in mind the things I was able to show you on December 31st exploded. So good trades. We were 12 for 12. So just, keep that in mind. Now, well, I know everybody and their mother loves Tesla. What do I think? Well, I like it when it forms consolidation patterns. I don't know what to call this. So a lot of people buy on the way down versus the low. That's fine, as long as you have a stop. So stops are key. If you didn't have a stop in here and you just said, I know it's going up later, well, you might be long from 50. So if you have a $20,000 account and you buy 150, 148, 138, you have no money left when it's 28. So just keep that in mind in there. It's all about initiation in longevity. In longevity. And as you say, NASDAQ's a push. What are you doing there? It's all over the place. Like I said, with Russell up, bonds up, Dow up, you don't short the NASDAQ at support. That's all. Even if it looked like a breakdown, care about price support and care about other indexes. I mean, that's how we do it. Transport's way up. So, look at that pattern. Like I said, you have that pattern on a Russell on an hourly. So I just don't see the trade. I just want to make that clear. So I'm just not doing a lot in here. Now, I know there are a lot that trade this. So, and I'll show you. I mean, I saw Mike Tito put up a trade here. I have a tough time staying in these things overnight. But what's happening is you're seeing a number of these stocks. We saw it in SoundHound earlier in the, later last year, that all it did in here, and I'll take it over here on a 20, let's say. And what you see on a lot of these is people out of sync. And what do I mean by out of sync? What happens is they buy when it gets too far from the 20, and then they sell because they give up. When really, when it catches up to the 20 is when you look for your trigger on the upside. Trigger on the upside, trigger on the upside. This never looked good. You never got that follow through candle on the upside. This wild move, every single move got too far from the 20 and came back to the 20. So the whole idea is once it gets near it, you look for that reversal pattern. So that's what we do. This one never had a follow through to the upside. So just keep that in mind. So I was looking at a CY. I don't even know if it works in here because it's an obscure stock. CY. Yeah, there you go. Caught up. Had the follow through candle. So that was a good one. I like it better on that kind of thing when you get the bull flag. So then you got the bull flag within the bull flag. But yeah, that was a good example of a stock that went to the 20 and then had a follow through to the upside. So that was a good one. Like I said, we don't have a lot on now. We did fine. We had a good hedge. We did fine. So the next thing to do is definitely look for those follow through candles. But now, if this follows what happened in 1980 and other election times, so I'll show you what we're talking about. Other election times. What happens is the markets overshoot the moving averages. And like I said, somebody in StockTwits said, I thought you said there was resistance down here. And I also said that I wouldn't bank on that when you have these kinds of election rallies. So when you take a number of different moving averages, I'm not sure they're going to matter. So short squeezes can go farther than you ever imagine. Look at that one. If I want a short, I'm going to look for the indecision candle when it gets too far from things. So that's all I'm going to do. Like I said, it could go, heck, maybe tremendously far from a moving average. The key is the trend lines and the reversal candles, the follow through. So just keep that in mind. And Amir, I see what you talk about in the Russell, but I'm telling you, I would not look at negative divergence. In fact, it was positive divergence. Here's negative, but it was really because you could draw a trend line. That's always the problem with the MACD to use for divergences. Most of the time, it's a hindsight. Why do I say that? Because right here was a negative divergence, but it went up so much, it wasn't a negative divergence anymore. So negative divergence here, and it exploded. So I would start with chart patterns and trend lines. So as you see right now, it's not telling you a thing. It's stuck against resistance, and the bonds are going to resistance. So it's a push. That's what I mean, a push. So that's where I am right now, which means I'm not doing a lot in here. Now, another thing I want to show you because it's been working. So I'm a lot into correlations. So bonds, go and look at an hourly chart. See that? Now on the left, look at the Russell. Boy. So you see they're relatively similar. Relatively similar. The whole key is if this breaks up, that's less likely to break down and vice versa. But it's not just indexes we look at. So how about the transports? Well, when you see that, which to me is growth oriented, you don't mess around with the Russell on the downside for sure. So keep that in mind. So there's all these differing things today. Remember last week, you had the transports, the utility, everything getting pounded. So it was much more likely that bearish patterns in the ES and NASDAQ were going to work. Now, I think basically we like the NASDAQ on the downside. If we're going to play anything to the downside, not everything's lining up. That's why we're not doing much here. So now I want to get to something else in here. Correlations. So I showed you IONQ. I always key off the most volatile, expensive stock in the group. So when this started going up, it was more likely the secondaries were going up. We were long QUBT. So we were long it from here. Little bull flag, little bull flag. If that breaks up, that's more likely to break up. Now, why am I showing you this? Because look what happened on an hourly, on a intraday. So what happened to IONQ? Temporarily, it went where it was at noon. Where did quantum computing go? Where it went at noon. It's not a coincidence. So when this was here and that was selling off on the opening, bearish patterns are more likely to work. When this started rallying, then support is more likely to work. So that's how we do things. And like I said, the overall market is just a darn pushing here. So, what are we doing the end of the day? Well, if I had to do a trade, I'd be shorting the NASDAQ. But like I said, you're near a lot of support. So the verdict's still out. Is something going to change? Well, do you play Amazon on the downside? Figuring it goes, if the NASDAQ goes down, that would be the ones to play. Yeah, probably. The problem is you have gap risk overnight because the overall market isn't in a downtrend. So I'm probably not going to play any of these. So just to let you know, you're watching the NASDAQ. You see the developing topping pattern. So like I said, you had the support but you had an oversold. Well, and an oversold. Do I think it's going lower later? Like I said, I'd love to see this futz around for another hour. Have this go back to the zero line, but you still have that support to contend with. So I'm probably not doing anything in here for 2 hours. So in fact, I'll show you. Let's go and take this again, but I'm going to take on the NASDAQ on 2 different time frames. So on the left is the NASDAQ on an hourly. On the right is the NASDAQ on a 15-minute. So where's the price support? Well, the price support is that area. Like I said, it's an area. And it doesn't mean to blindly buy at an area. It means to look for a reversal pattern. On the other hand, you're oversold here. That's why you're getting these reversal wicks. You're getting that support when you're oversold. So now the problem is, if you want to short, you want to see it do that for, let's say, 2 hours, have this go back to the zero line. So that's how I'm looking at it. Yeah, I'm not saying it's support, but I'm just saying that when I see this oversold after a massive up move and other groups are having another leg up, I don't see the trade. I just don't see the trade one way or the other. So we're not doing a trade. If I saw the Russell out of nowhere go down to here, well, that's different. But as you see, it looks okay. That's why we're long small stocks. But you see, in fact, from a hedge point of view, you probably buy the Russell and sell the NASDAQ. But you see the dilemma. So if you put on the left, you were asking about multiple time frames. That sure looks toppy to me. But the problem is I want to see this get back to zero. And if it gets back to zero, is that going to break up? Or is it going to stay in this futz around pattern? If this stays around zero, then I think it has a leg down. Then it has enough energy maybe to plow through that support. So here, I'll be happy to show this graphic. Oversold, topping formation, support zone. There. So there's your support zone. So what do you do when it's oversold at support? You don't touch it yet. For it to plow through this support, you're going to need ammunition. And ammunition means this getting back to the zero line. So here, I'll be happy to show you what we're watching, which means at the moment, you don't have to do a darn thing. And on the left, oversold. So I'm happy to show this. Yeah, it's just not there at the moment. I'd love to show it. And like I said, I would not, head and shoulders against support is not to be trusted. Just keep that in mind. So too many people look at head and shoulders. Just keep in mind, 80% to 90% of patterns are consolidation patterns. When I show a reversal pattern, it's because it's already reversed. So just keep that in mind. As you say, the NASDAQ just doesn't have it. So this is my if-then for today, Chart Patterns Mastery. If the bonds sell off and the Russell gets back under zero, I think you'll see the NASDAQ plow through that support and be down 100. That's going out on a limb for you. That's what I'm expecting. There. So like I said, if the Russell starts going down, look what the NASDAQ's doing. Go and put it side by side. And I think you'll see, this is what traders are looking at. Now, keep in mind, when I was on the floor a long, long, long time. And keep in mind that we had a bank of screens we watched. We'd watch advanced decline. We'd watch companion stocks. I was in the IBM pit. We'd watch other tech stocks. We'd watch Boeing because Boeing was a big component of the SPX. But we watched news. Guess what we didn't watch? We never watched the VIX. The VIX is a lagging indicator. We never watched the 1 year. We never watched the 2 year. We watched the ZB, the 30 year. So we watched the 30 year and we watched a bank of stocks and the advanced decline. We didn't watch the dollar. So Tastyworks just did a thing on the dollar correlation. Hasn't worked for years. So this is what we use. So now what else are we going to do? So Chart Patterns Mastery, this is what we're going to be doing in the background. We're going to watch that on the right. We're going to watch this on the left. So if these two start to falter, I think it's a layup that the NASDAQ is going to break down. So that's what we're watching. So that's our theory, so to speak. Now, if the NASDAQ breaks, it's going to be led by the big NASDAQ stocks. Like I said, it's still an iffy. But if I'm playing it, I'll probably play an Amazon to the downside because it refuses to rally with the NASDAQ rally. So I'll probably play Amazon to the downside. Do I play Tesla? It's a cult stock. I hate playing Tesla. On the other hand, it better hold here. But it does a lot. Now, why would Tesla hold? Because it's in a long-term uptrend, I guess. To me, I go on this. If you're day trading Tesla, day trading, I'm not talking about long-term. I know everybody loves Tesla. But if you're day trading Tesla, does everybody see the bear flag? Now that's a Brecher ledge, a sell-off and a horizontal consolidation. And that horizontal consolidation did indeed complete a head and shoulders. Now you have this. So it rallied to the top of the head and shoulders. And now you got to look at a 5-minute chart. So it better hold here. Now, this stock has amazing recuperative abilities. Don't get me wrong. But it better hold. If this doesn't hold and gets under this, then it's a bear flag and has no support. But like I said, this stock has amazing recuperative abilities. I'm not playing Tesla. I'd rather play that. So when you see this side by side, which one looks worse? On, let's say, a 5-minute chart. This has a tighter pattern. Tighter the pattern, the tighter the stop. This is a loose pattern. I don't know what to tell you there. So that's how I look at it. So I don't even look at MSTR. Like I said, I try to fall in love with a pattern, not a stock. So MicroStrategy is too news related for me and too leveraged for me. It's up against resistance, but it's too keyed off an underlying commodity. So I just don't trade it. What do I think of Bitcoin? Well, how many people looked on Twitter and saw people talking about a Head and Shoulders. Remember, a Head and Shoulders, it's not the sell-off. Look at that, oversold. It's the break and then the test of the trend line. So you haven't gotten that. So I'm not saying it's bullish. I'm saying it's a push. Same thing. I don't have enough of a read. Up here, bull flag. But I don't have enough of a read to give you an educated guess. And because of that, I don't have an educated guess with MSTR. If this broke and then came back to test it, that's a whole different situation. That's why you look at the MACD. A lot of times you get that oversold rally to the trend line. Not this. That wasn't it. So that's what I'm watching. So I have no idea about MSTR. In here, on what I'm watching on an ultra short-term chart, I'm seeing that this rallied to be up to here. Guess what? To that trend line up here. And what didn't bounce? That's what you play to the downside. So your theory is if the NASDAQ bounces, this won't move a lot. If the NASDAQ has another leg down, that'll probably go down. That's the way I look at it. NVIDIA, well, I've been bearish on NVIDIA. So just keep that in mind. So no opinion on these small stocks like that. So now that being said, SP, before I'm not blowing you off, this is another example of a strong trending stock like SoundHound was last year. And it keeps coming to test the 20. And then at the 20, it's forming a bull flag. This time, it's a little sloppier. So, but on the other hand, it got oversold and had the follow-through candle right here. See that follow-through? Right there. So, but that's a little sloppy for me because it wasn't perfect. When it followed through here, now it's where it is now. So, that's a tough one. I don't know what to tell you in that. Here, if you would ask me back here, definitely I'd say that's a bull flag and it's trying to let the 20 catch up. That's why now is so dicey for me to play the small stocks, which I'm trying to play, because they don't have as tight a pattern. And like I said, right now, NASDAQ, sure, we could go in and short a little Amazon and see if it works. As you see, Russell sold off just a teeny bit. Now forming a defined trend line. So if that Russell breaks, which to me has kept the NASDAQ from cracking, if that breaks, I think you see this test the low. Another 50 points down. If, like I said, it's going to take some time for this to develop. So in there, Amazon, that's the problem. I'm only going on relative weakness relative to what's going on in the markets, but I don't have a good enough trigger. It's a great question, JR. Great question. So is there a trigger? Maybe that. But let's go over it. I have a little time. Like you see, the NASDAQ's rallying. That's why I'm not selling in the hole. So what's our trigger in Amazon? Like I said, it's a great question. And like I said, the way I do it, you're going to miss a lot. We're trying to get it on the direction. All right, Amazon, hourly chart, right at support. 15-minute chart, at support. Same with the 5. Now, your next trigger, if the bonds were down a point out of nowhere and they were unchanged, that would be my trigger probably on a stock underperforming. So that's one of the ways. Number 2, you have tomorrow, Monday's a national holiday in the U.S. So it'd probably slower tomorrow. Is there a place that has so much open interest it can pull it up or down? For me, I look at evenly dispersed. And you see the evenly dispersed is 25 and 20. So that's not enough of a trigger. Now, if this was like where it is and there was no open interest above it, yeah, I'd play it to 220. At the moment, you see it's a push. That's why I'm not shorting in the hole. So I'm not saying I'm buying. I'm just saying I don't see the trade. And the problem in there, JR, is let's say I think it's going to 220. I would love to play this, but you have the gap risk overnight because the overall market hasn't turned down. I looked at that. But the problem is if it opens at 225 tomorrow, you blow out that $1.97. So I don't have the trade at the moment. So in there. But SP, I want to show you something interesting because I have a second to show you. So you were talking about ZVIA. So let's reverse engineer this. I want to show you this. So it does okay volume. It does have options. So what did it have in common all of these times it went up? Almost every time it got oversold on a daily chart. Almost every time, or at least near zero. That one was a better one. Got oversold over the 20. So oversold over the 20. So another way to do it is this way. You go to a scan and basically you're looking and you're saying, well, it's oversold on a daily. So that's one way to play it. You can go into here. Now, I'm not saying every one. And I wish I had a lot more time and I'd show you how to maybe scan for squeeze that are oversold. But let's just go to a daily and I'll show you. So we're going to go to a daily. I call it a Brecher bull scan. There you go. But I took it over the ATR trailing stop. You can do it with the 20. Like I said, a lot of people that I respect use the 20 when something's in an uptrend. So let's look. We're going to go to there. All optionable, but I'm going to change that for you. MACD under zero. The close on a 20 is over, let's say, 0.05%. That's going to be a lot of stocks. So all you're doing is trying to find what you're talking about. Stocks that are oversold in an uptrend. Now, I usually look at an uptrend like in a Caterpillar with a 50. But in these small stocks, these strongly trending, you got to use a 20. So that's a lot. So the next thing I do is I add volume, which is under study. And we go to volume, average volume. So we're using your stock as a poster child, not trying to put you under pressure. So now you have stocks with average volume of 300,000, 166. Then we'll take stocks between, let's say, 2 and 80. You can take 1 and 80. You know, you've seen other people make some good money on these. So let's just take 1 and 50. So we're taking all optionable, which you don't have to do, but I like options. From 1 to 50, the MACD is under zero. And like you saw, sometimes it's just that it's near zero. I don't know how to do that. You know, within 1% of the moving average. But you can't do that because you want them really oversold too. So I don't know how to do it. 20, average volume 300,000. Save scan. We're going to make this a Brecher bull. There. And SP, I'll share this with you. So I can't share it in the YouTube room because this is, you know, that is for you. And like I said, you owe me. No, just kidding. Just kidding. So let me go into it. Brecher bull daily. Most of the time I date them because I have so many scans. So we're just going to go into Brecher bull daily. And like I said, I wish I had a lot more time. I wish I had more time to then manually scan everyone. But I'll give you a for instance. Once you save it, it becomes over here. It becomes a watch list. I don't know if you realize that, but I got to go. I see it's 12:30. I'm not sure who else is on. Let me see. Let me see. Maybe I can stand a little longer if you want. Actually, I don't know who's on. So I got to get going, but go and manually look at those then. Go and manually look at them. So just go over here, go to the Brecher Bull scan. Now I'll show you. So we'll go to the Brecher Bull scan. And what I do in there now is just manually scan them the way you were looking with ZVIA. Like I said, I'm not going to blow you off. Hey, there it is. Look at that. There's one, VSTM. There's one for you. Now, I'm not saying I'm buying all these, but if I am, you see why. Oversold over the 20 with a follow-through candle. So I hope that helps on what I was showing in here, SP, and I hope that helps. So like I said, now you might ask, well, why aren't we buying VSTM? Well, a lot of these have, well, I'll show you. I look at news also. And I want to show you something that bothers me. It really bothers me when the operating officers leave. But still, let's just look for last. Number one, it doesn't trade a lot of options. Number two, what about next month? Well, the fives are too expensive. You don't really want to buy the sixes because it's got to go to 6.5 just to break even. But I would go through them. You're going to see some look a lot better than others. That's more a bear flag, but it is that support. Now you look for the follow-through candle. That's all you're doing. So Warby Parker, isn't that the name of like Dan Aykroyd in Trading Places, the country club guy? It sounds like it, but there you go. Oversold at the 20 and you had a follow-through candle. So I hope that helps. So take care. Like I said, thanks for the great questions, and I hope that helps.